The stock market blasts into 2019 with the best start for a new year in a decade. The Santa Claus rally was late this year, but what does this mean for the markets going forward? Will President Trump compromise on building the wall, or will the Democrats win the battle? Most importantly, what does this mean for our portfolios for the remainder of 2019? Sign up today for my 2019 Economic Review webinar next Tuesday night. Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown. It's Thursday, January 10th, and this is CB3 on 3. In political influences, Trump's determination to build the wall on our southern border and the Democrats' unwillingness to cooperate has now caused the second longest government shutdown in U.S. history. Neither Trump nor the Democrats appear to want to budge on their positions. So who wins this battle? I think it would be great if the American people won. That means protecting our borders and getting people back to work. Here's my take on the political implications for our investments. The partial shutdown of the U.S. government is making it harder for the Fed, investors, trade negotiators, and others to read the economy at a critical moment in this longest bull market in U.S. history. Economic data, including the federal budget deficit, consumer sentiment, retail sales, and business inventories, and even housing starts, and ultimately GDP, all of those reports could and probably will be delayed. Missing and delayed data brings uncertainty, and uncertainty brings market volatility. In fundamental influences, officials of the Federal Reserve have recently signaled they're pausing their interest rate increases until they see more data on the economy's direction. It's a challenging moment for the Fed, which raised interest rates 4 times in 2018, but has signaled in recent weeks that it could pause interest rate increases because of uncertainties about interest rates. Here's my take on the fundamental implications for our investments. Initially, the market liked that new position by the Fed because lower interest rates are almost always more favorable for business and consumer spending growth. The Fed isn't flying completely blind for data, though. The Labor Department continues to release data, including monthly employment reports, which have shown a strong job market through December. The Labor Department also will release its Consumer Price Index tracking inflation later this week. It's January, so that means it's time for my semi-annual address to our clients and friends known as CB3's Fireside Chat. Register now for our webinar on Tuesday evening, January 15th. You can also attend one of my 2 Chicagoland appearances the next night, Wednesday, January 16th, or Tuesday, February 5th. See the information here or call our office so you can register for one of my 2 live appearances. I'll look back on 2018 and look ahead to what's already been a very eventful 2019. Bring your economic and portfolio questions and join us as we prepare for what the markets might bring us this year. And that's CB3 on 3 for Thursday, January 10th. Remember to register for our webinar this coming Tuesday. Bring your questions and concerns. What's in your portfolio? If you don't know, you should. And if you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.